Cool. Well, panelists, welcome. Audience, students, professionals, et cetera, welcome. Really excited to, host this event. I think, we had 400 people or so expected. Obviously, due to Zoom capacity, couldn't accommodate everyone that wanted to register here today, but we will have more of these sessions. Don't worry. Really excited to have on these, amazing panelists today. So let's get started, team. For those I haven't met yet, and I'm sure I've met most of the students and professionals in the audience, welcome to the One Financial Network Elevate Private Equity Private Credit Forum. Like I said, we're thrilled to welcome a sold-out audience across all of our firms and universities, and also an incredible panel of speakers who will dive into all aspects of sort of the buy-side careers and recruiting and so on. Today we'll spend time both at the analyst and the associate level and talk about recruiting at both of those levels. Like I said, Kaushik Ravi here, founder, CEO here, as well as a private equity professional. My background the last 9 years is a leader across PE and IB. Started at Goldman in our investment bank, then Goldman Private Equity, then director in PE. Fortunate to have led over 200 billion of buy side and sell side deals. Happy to share my, I'll just put my LinkedIn here for the folks who might be interested. I'm sure, everyone here knows the platform. Like I said, One Financial Network, formerly Elevate. We have a large hiring platform, fast growing, working across from analyst level all the way to partner, CEO, and C-suite. Support over 700 billion of AUM of firms on that platform. We have a large networking platform. We have a large training platform now. The only training platform that's used at the top 12 business schools. We've hosted over 100 training sessions since 2021 across, HBS, Wharton, Columbia, et cetera, as well as an investment platform that we're building up. On the hiring side, we'll have more such events with top firms and over the upcoming months, across the analyst, associate, VP levels, across large cap PE, growth, buyout, banking, et cetera. For anyone who's actually laterally looking for roles, we have, over, hundreds of jobs on our sort of probably what is the largest private equity venture capital growth jobs platform. Spot is the networking platform. You'll get more over emails, networking events in New York, London, Chicago, et cetera. And yeah, about 150 club partnerships across the top 30 business schools, undergrad schools, as well as the top 50 business schools. So just a quick overview of the platform for everyone here. Without further ado, I guess let's meet our amazing group of panelists. I think all the panelists who joined, if you don't mind just putting your firm name next to your name so that our folks can ask questions as they come up. So we'll just go around the horn, guys. We have a lot to cover today. Like I said, the agenda today is going to cover basically everything around buy-side careers, the overview of the roles of the different firms that these folks work at, as well as sort of what it takes to be successful, both in recruiting as well as on the job. So we have lots to cover. Folks have questions. Like I said, we'll try to keep this as interactive as possible. Put your questions in the chat or the Q&A, and then we'll try to get to them, as we go through this. So why don't we, go, I guess, around the horn. I will start with Spencer, if you don't mind, just giving us a quick intro. I think, Spencer, I met you when you were still at Penn, I believe. So nice to see you. Always welcome back to our panels. But yeah, Spencer, why don't you kick us off?
Yeah, so I'm Spencer. I'm an associate at New Mountain. I've been at New Mountain for a little over a year now. As Kaushik mentioned, I went to Penn undergrad. And before joining New Mountain, I was at Jefferies for 2 years in a middle market kind of services oriented group. So I had a lot of sponsor and PE company experience there.
Amazing. Thank you. Thank you, Spencer. And for folks that are new to the New Mountain platform, we host New Mountain and their CEO, alongside a lot of other firms that'll happen in the spring again. So definitely, we'll go through that. Let's go to Abhi next from General Atlantic.
Hey guys, great to be here and excited to speak with some of you guys. My name's Abhi and I'm an analyst at General Atlantic. And I'm a first year on their enterprise technology team.
Amazing. Thank you, Abhi. Thomas, do you want to go next?
Sure. Nice to meet you all. I'm Thomas. I'm a second-year analyst at KKR on the private credit team, where I focus on asset-based finance. I graduated from UChicago in 2023, and I studied econ and computer science there.
Perfect. Thank you, Thomas. Manis, do you want to go next? And then Ishan, you can round us out.
Yeah, sure. Hey guys, Manis. I'm at Blackstone Private Credit. I've been here for 4 or 5 months, joined from UVA. and focus mostly on corporate private credit and our flexible capital strategy.
Awesome. And last but not least, Ishan, do you want to give your overview?
Yeah. Happy to round it out. Hey, great to be here. Thanks again for inviting me onto the panel, Kaushik. My name's Ishan. Graduated from Berkeley in 2022, about 2.5 years ago. Spent a couple years on the private equity investment team at Francisco Partners, and recently transitioned to an operating role. But excited to shed some light on my experience.
Amazing. So thank you, panelists, for you guys, just as background, who's going to be in the audience. Like I said, we have expected about 300 to 400 folks across, current analysts in investment banking or management consulting, as well as students who are in those tracks, right? So incoming summer analysts, as well as incoming full-time analysts across the top sort of 20-25 universities. So that's just to give you guys a little bit of a background around that. So, for our agenda, guys, why don't we start off with, I think it'd be really helpful. We have a wide array of firms on the platform. Would be really helpful for everyone here to just give us an overview of the firms and sort of where their platforms may sit within that. We'll go in the same order, guys. So Spencer, if you want to just kick us off, give folks an overview of New Mountain, what you guys focus on, and kind of what are your competitive advantage, but also how do you organize yourself?
Yeah, happy to. So I would describe us as a growth-oriented private equity firm. So we are primarily buyout focused, but I would say we're focused on really buying the highest quality companies in their respective markets. We were founded about 25 years ago. We just raised our 7th fund over the summer, which was a $15 billion fund. And so now we're actively deploying it. We're a pretty generalist investor across infrastructure services, software, life sciences, healthcare services, financial services, pretty much we just really focus on acyclical, high quality businesses. We kind of call them defensive growth businesses. And yeah, I would say our approach is a generalist approach in the sense that so I spend a lot of time in our infrastructure services effort, as well as our software and information services effort. So people are not siloed into one individual team, and there's not a specific infrastructure services team, they will allocate $2 billion of this fund. It's not really an approach like that. We will just look for the best opportunities kind of regardless of the sector that they sit in, which is one thing I really enjoy about my firm.
Amazing. Thank you, Spencer. Great overview. Abhi, do you want to just give folks an overview of GA and all the areas you guys focus on?
Yeah, so I'd say General Atlantic is a multi-strategy fund. We do everything from growth equity, which we sort of grew up on, which is probably a core strategy today. But we have funds that do B and Z, which does climate tech. We have infrastructure. We do credit. So kind of all around the horn. We recently launched a buyouts team as well. $100 billion in AUM. And we recently launched a reinsurance fund, actually, which I'd highly encourage you guys to check out, which I think is a really exciting thing we're doing.
Awesome. Thanks, Yabi. We'll get into that. Thomas, do you want to go next and give folks an overview?
Yeah, sure. So KKR is about $600 billion alternative asset manager. Really covers the entire alts universe. I think most people know it for private equity, but big infrastructure, real estate, credit strategy. So I sit within credit. It's about $270 billion. There I think a big competitive advantage is just our ownership of an insurance platform. So we invest across insurance capital, drawdown opportunistic funds, as well as a variety of sort of open-ended long-term vehicles.
Amazing. Thank you, Thomas. We'll get into credit, where you and kind of Thomas, I think, or Manas can go a little bit more into detail of sort of the growing credit market. Manas, do you want to go next?
Yeah, sure. I mean, I think like KKR, Blackstone's a firm that has its hands in a lot of pies. And I want to say, kind of in terms of companies we try to focus on in the credit side, in the credit vertical, it's those non-cyclical kind of high quality sectors that Spencer focused on earlier. In terms of the type of deals we do, I think you kind of have regular way direct lending, which is financing LBOs. You have the asset-backed finance side of the firm. You have more kind of flexible capital solutions, which can take the form of say like a risk transfer for bank, capitalizing a reinsurance vehicle, etc. I think with kind of the insurance capital that's entered the space that Thomas mentioned earlier, I think we're able to do a lot more creative things with corporates that have a much lower cost of capital. Well, I think one good example to look into there is probably kind of the deal Apollo led with Intel, I think last year or 2 years ago, where they basically LME'd a factory into a drop-down vehicle and financed that separately. Sure, we can go into it later, as Kaushik mentioned, but yeah.
Amazing. Yeah, I do think we should spend just a minute on kind of what is causing this sort of explosion in the credit space and sort of what is the opportunity set for our young professionals, right? To think about that, because, a lot of folks go from banking or consulting and go straight to growth or the equity side. Maybe you guys can talk a little bit about the credit side of the world and kind of what the opportunity set is. So thank you, Manas, for kind of kicking that off as well. Ishan, I think, why don't you give us an overview of sort of, I guess we'll focus on, since you've spent most of your time at Francisco Partners, you can give us an overview of that platform. Their analyst program, obviously a little bit more, newer to sort of, so maybe give us an overview of what FP does and kind of where where the investing, where you sat, I guess, with there.
Yeah, definitely. So I guess quick overview of FP's platform, exclusively technology-focused investment firm. Probably spend a vast majority of their time looking at software businesses and semis, everything really that lives under the umbrella of technology. The kind of main strategy is private equity, but they also have a private credit strategy. Have raised over 50 billion in capital commitments, and really a pretty broad mandate, very kind of flexible capital approach, and sort of the investment style spans from value to growth and back. So really, I'd say flexible in the way that we do deals, or excuse me, the way that FP does deals. But yeah, I'll pause there. I think approach wise, pretty similar to what other folks mentioned.
Amazing. Thank you. Thanks, guys. Thanks, Ishan. So let's, I think it'd be, I think it's cool for folks to get a little bit of the next topic, which is a sense of rationale for, obviously you're all still early in your career. So, but the rationale that you guys had to go into credit, or, Ishan and Abhi, in your case, kind of more the growth side of kind of the growth buyout side. And then Spencer, in your case, going to a more generalist, upper middle market fund for private equity. So maybe, Manas, do you want to start us off with sort of, why you kind of entered kind of your career into credit? What is the opportunities that you see in that space and why it's exciting for folks?
Yeah, happy to. I think kind of throughout the recruiting process, you end up meeting people and getting a sense for what kind of deals you're going to be working on, what your day-to-day looks like, et cetera. The thing that kind of drew me specifically to the role I'm in was it's kind of a generalist role across say corporates, across more asset-backed finance type stuff, kind of that reinsurance vehicle, SRTs that I mentioned earlier, et cetera, et cetera. So I think the thing that fundamentally drew me to where I am now is that I'd be getting pretty good exposure to stuff kind of all across the spectrum, in terms of like the asset class and what I think are the opportunities there. I would kind of boil it down to, like, for example, like a company can't issue a pref in the public markets on the equity side, and it's a similar dynamic on the debt side, where companies are just fundamentally limited on the type of things they can issue in the public markets due to the buyer base. It's fragmented. You kind of have to standardize it. So I think as the private credit markets have developed, similar to the private equity markets, you have these large pools of capital that have pretty low cost of capital from high net worth individuals or insurance vehicles, et cetera, that has given firms like Blackstone, KKR, et cetera, the ability to go to market with pretty attractive, highly structured bespoke solutions. Whether that's like going to a bank and doing something funky they just can't do, or whether that's going to like Intel or Foxconn and telling them you'll fund some amount of capex for a single facility based on a like a payment schedule that the public investors would just not be amenable to. It's a large and kind of growing opportunity set there. I'm sure you look at kind of the heads of any of our firms talk about what they see in the market, that they're all kind of saying the same thing, which is we have this large flexible asset base with a low cost of capital, and you can go to basically every pocket of the market and offer them kind of attractive structured solutions. Yeah.
Yeah, I mean, it makes a lot of sense, right? Since the financial crisis, and to Honest's point, right, you've kind of seen this entrenchment. And so as a result, the credit markets have grown. And I think the ability to do a lot of flexible thinking and really complex thinking that maybe a lot of traditional financial institutions like banks can't. And the lending market and credit market is, 5, 6, 10x the equity market. So it makes a lot of sense that there's a huge TAM right in that space. Thomas, I don't know if you have anything else to add to this point. If not, we can come back to you. But any other comments on, why credit, why our incoming analysts should be thinking about credit, as kind of on the same kind of path as equity?
Yeah, I mean, Manas touched on a lot of the key points there. I think, the thing I would just reiterate is that it's like there's a lot of white space in credit right now. I mean, if you look at a lot of the, like big private equity firms, a lot of them only really stood up credit businesses in the past like 5-10 years. And so it's a very like nascent market, and I think it's one where there's like you have a lot of room to grow in your career, I guess, compared to others. I think that they're also just the deals can be very interesting from like a technical perspective. I think that's something that I've really liked about it. And just sort of at the forefront of a lot of like the equity story of these big public private equity firms. So like definitely a cool area to be in from that perspective as well.
Yeah, and Thomas, I think the one point that I think all our people, right, all of our incoming analysts and current analysts should think about is, you kind of want to see where the market is going to be, not where it is right now or where it used to be, right? So, and not that, I've spent my entire career in private equity, and not that private equity isn't fantastic on the equity side. It's sort of like, to Thomas's point, right, it's kind of the growth rates in credit are 3, 4, 5 times private equity. And so it truly, I mean, my advice for everyone here is, think about the things you want to do. And if you are generally attracted to more technical things and more complex structural ideas, then, it's certainly a career that I think you should think about, or at least, get some experience, just given how fast it's growing. And equity markets tend to be more cyclical, whereas credit markets, tend to sort of, you need to kind of give lending across different cycles, right? So it's just something to think about. So let's kind of shift to Abhi and Ishan a little bit. Kind of, you guys went into kind of more growth buyout on the technology side. So what was your, in addition to your own interest in technology, kind of reason to go into, in kind of an industry focused type of fund where you predominantly only invest in, tech, right? So maybe give us a little bit of thought behind that. Ishan, do you want to start?
Yeah. Happy to kick it off. Definitely. Look, I'd say a couple points on that front. One thing that I did appreciate about sort of FP's approach is sort of the bread and butter is buyout, and for the most part, they kind of prefer majority control. Helpful
Hey, guys.
in terms of.
Sorry,
Hey, can you hear me?
Did we lose Ishan, or was it just me?
Hey, sorry, can you hear me okay? Or is
I can
my...
hear you now.
Okay.
Yeah, I can hear you.
Sorry if
Sorry.
if I'm cutting
No,
out.
you're good.
Apologies.
No, you're good. And other panelists, let me know, because like I said, I'm traveling, I'm in London. So if it's my Wi-Fi, then I'm happy to sort of adjust. So yeah, Ishan, keep going.
All good. It may very well be my Wi-Fi, so apologies if I cut out. And I'll let
No
Abhi
worries.
jump in a second here. Yeah, I think all I was going to say is, in terms of a differentiating piece, being on the private equity side, I think having a specific subsector focus is really important. So, for context, like given FP's general approach is technology, there was kind of 4 vertical groups that segmented the firm, and we had specific focus and partners dedicated to each of those sort of 4 verticals, those being cybersecurity and infrastructure software, healthcare IT, application software, and then kind of consumer internet, fintech, et cetera. So I think having that focus was really important in terms of winning deals and kind of positioning ourselves to compete with all the other firms out there. Obviously, tech investing has become largely commoditized over the past 5 to 7 years now. So I think the only way to differentiate is kind of that subsector focus and intellectual capital, which goes a long way.
Very helpful. Abhi, did you want to add anything on your rationale?
Yeah, I'd say if you enjoy software, growth equity and buyouts are a really, really interesting place to be, because you spend your whole day really looking at a lot of really different business models. And software, I think, is a really interesting industry because there's so many different business models. You can have cloud business models, vertical software, payments. It's very interesting. But it is something where if you don't fundamentally enjoy learning about new technology, if you enjoy spending most of your time on the Excel side of things, then I think there are other parts of finance that might be more interesting. I'd say the most successful people at GA and most growth equity firms I know are the type of people who are on Twitter or who are reading about tech at 2 a.m. on a Friday night. Like we are the type of people who like truly, truly love software and technology. And if that's something you like to do and that's something you like to learn more about, like I think that's a great rationale to go into growth equity.
Great point. I think that's a broader point. Thanks, guys. Ishan. I think Ishan's point was, if you're going to go to an, kind of an industry focused fund, right, like an FP or GA, you're going to end up, a large industry breaking it out into a lot of different subsectors. And so, even still, it is a kind of a big chunky area. And Abhi's point is, regardless if it's software, because everyone who I speak to says they want to go into tech, but I think really understanding why you think you'll be a differentiated investor in the industries you're going into, and are these industries that you really genuinely care about or passionate about? Like, Abhi said, you wake up in the morning and get excited about them, right? So those are the types of things you should be doing, not necessarily just chasing tech because everyone's doing tech. And I think those are good points, guys, from everyone here. Spencer, to round this one out, maybe give us some rationale behind folks thinking about kind of more the generalist path and working across different industries and kind of rebuilding that core PE skill set that you might be doing at New Mountain.
Yeah, I would say the way that we approach investing is a bit different, and we don't. I would say like a big benefit of why I wanted to join New Mountain was I had always had a strong interest in tech. I had also had a strong interest in services just based on my prior experience. I didn't necessarily know when I was 23, when people now have to make decisions for the rest of their careers, what industry they wanted to go in. And a firm like New Mountain is really unique in that you can kind of be pretty flexible. And then when I finished up my time at Jefferies, while I've been here at New Mountain, I've been able to work across a bunch of different sectors. And like I gradually kind of grew my interests in some of the subsets of the sectors that we cover. And now like those are the areas that I feel, and like to the extent those shift over the next few years, I'm still able to kind of shift and have that optionality. But like I primarily spend my time in our like infrastructure and B2B services effort, as well as our software and information services effort. And like those are most likely than not going to be the two areas I spend the rest of my career in. And I feel like the best way to actually learn that is by virtue of looking at those types of companies, working with those types of companies day to day. And I think our flexible generalist approach was what made me ultimately have conviction. And I would say that's not necessarily super common across the private equity ecosystem, but is one thing that really appealed to me about New Mountain. I would say generally on private equity, I view like we talk about private equity as a business that helps build other businesses, and so that kind of core skill set of kind of mix of qualitative, is this industry growing? Why is it growing? What are the key secular trends? Is this a high growth, high quality industry or not? As well as the Excel modeling, like, okay, what can we afford to pay if we want to triple this investment over the next 5 or 6 years? You kind of get a best of both worlds, which is another part of private equity that I think is just different versus private credit and growth equity.
Great point, Spencer. I completely agree with that. I think, to Spencer's point, like the early point in your career is you make decisions, but also giving yourself optionality, but also building a large skill set or broad skill set that allows you to kind of, think about businesses from like, all types of capitals and all different types of industries. I think that's one of the benefits of going to a more generalist program. So thank you, Spencer. I think we had a bunch of questions. Joshua, I think you had a question. If you still have one, I'm going to quickly promote you before we kind of go through. And guys, put your questions in the Q&A. Let me open up the Q&A actually for folks to ask questions. I know, Josh, if you still have your question, feel free to ask folks here. Else, we'll kind of keep it moving. Joshua, going once, going twice. I think looking at the profile, Deutsche. Okay, that's fine. We'll come back. Okay, guys, so let's keep going through our through kind of our questions. I think the next topic I'd love for our panelists to give us, our folks in on, private equity. We just had an investment banking forum a couple weeks ago, guys, right? We had all the different, bankers on the different banks. I would love to get a perspective from you guys on your day-to-day, right? So it's very different from what our, students and professionals kind of heard a couple weeks ago on sort of the banking side. So I guess we can go kind of similar order. I mean, Thomas, I'd love to call on you here as per our kind of notes here. Kind of what does a day-to-day look like, right, at the analyst level? You've been there for close to 2 years now. What are the roles and responsibilities? Kind of what is the expectation like, since most of the folks in the audience are going to be looking at full-time analyst programs or full-time associate programs? Like what are the expectations? What do you find interesting about your job, and kind of just give folks a sense of the analyst day-to-day?
Yeah, for sure. Okay, so I mean, obviously I did not do investment banking, so don't have that as a point of comparison. But I'd say, people start at different places in the analyst program, and I think the goal by the end of it for everybody is to be like a trusted pair of hands to run the modeling, build the IC presentations, and manage the logistics of all the deals that you're on. And so, I would say day to day, things that are different about working in sort of an investing role versus banking is that you just are sort of like writing an essay versus taking a pop quiz or like doing a homework assignment. Your projects are much more long term, and I would say because of that, you have just a little bit more agency over like how you manage your time, what things you're prioritizing, and like what your hours are as well, honestly. I'd say because of that, there's sort of a different level of maturity required because you really have to like drive your own schedule. In terms of what I really like about my job, I think that I'm given like a level of responsibility, but also just sort of like, I'm able to be a little bit free range, I guess, in that in our IC conversations, I'm like, presenting our deals or answering questions from our investment committee, and getting different exposure that you just don't really get in banking, I would say. And yeah, and happy to take any questions if you guys have any specifics.
Sure. Thanks, Thomas. I think we'll get to the analyst role a little bit more, right? So it's very similar, I think, to in some ways to the banking role. You're doing a lot of modeling, you're doing kind of a lot of presentations. The only difference is, right, rather than as an advisory capacity, like Thomas said, you're now doing it because you're presenting it to investing committee and to kind of make those investments. So I think that's maybe some of the key similarities and differences. I guess on the associate side, Spencer, I'll hit on you since you've kind of also been in this role now for close to 2 years. What are some of the key differences, right, at the associate level versus what Thomas just talked about at the analyst level?
Yeah, I would think of it more as just because as an associate in private equity, at least at my firm, that is still like the most junior member on the team. I kind of generally split my job into two halves. I imagine something similar on like the growth equity side. I would say it's like roughly a 50-50 split over a longer period of time. Any given week, you'll probably be more tilted to either portfolio company work or new deal work. But so the two halves I would say are like new deal identification and then execution. So you'll kind of canvas the landscape for different companies, different opportunities, what's coming to market, where we've historically spent time, where we might have liked companies in the past, but ultimately didn't get to the finish line for whatever reason. And then if we found a company that's either in a process selling itself, or if we're just speaking to a company one-off in a proprietary manner, we'll work through our diligence to understand how much has this company grown, how does this company go to market, what's the quality of the management team, to then understand, okay, like how does that then fit into a returns model? How can we think about if this would be a high returning attractive investment for us or not? And then you're kind of progressing diligence and then thinking about what ultimately the value of the business is, and then how you would ultimately help grow the business once you own it. So I'd say that's kind of half of how I think about what my role is day to day. And then the other half is support of your portfolio companies. I'd say this is like, in my mind, this is the more flexible. It's definitely a very fun part of the job because you can kind of you instantly become an expert, for better or worse, in whatever it is that your portfolio company team needs. So there are some regular way, like finance things, like helping with M&A and refinancings, but like I've been able to spend a lot of time with my different management teams since starting. So like, for example, one of my companies is launching this new SaaS product. for like focused on water and wastewater treatment facilities. That's the company primarily does operations and maintenance for water and wastewater treatment facilities. So I worked with our team to think about budgeting of the opportunity, what the size of the prize would be, and how we ultimately like build a business plan for this new growth lever. So you'll be pulled into, like, we're doing a lot of hiring at one of my other companies now. So I've been interviewing a ton of folks, which it's like I'm interviewing a bunch of 30 and 40-year-olds for jobs that I've never had, but able to just provide a different insight for our management teams. You'll really be pulled into all types of different tasks on the portfolio company support side.
Great. Thanks, Spencer. Exactly. I think truly, I think the private equity associate, analyst associate, even VP role is like as all encompassing as they come, right? At the director partner level, you're out just kind of a lot of times you're raising capital or, you know, building new relationships. At the associate VP level, like Spencer said, even the analyst level, right? You're doing the modeling, you're doing kind of the presentations, you're doing a lot of the, obviously all the diligence, as well as external facing stuff, right? Interacting with, lawyers and consultants and et cetera, as well as portfolio management, right? So truly, our professionals are, we're super busy, right? That's kind of why, because we're doing so many different things and have to wear all these hats and doing it at the highest level, right? So I think that's part of the excitement of the job. I guess, anything else on the growth side, Abhi, want to hit on? Like, obviously there might be a little bit more element to sourcing right on the growth side that may not be there on the, traditional private equity, buyout side. So, or credit side. So Abhi, want to just quickly hit on what is expected at the analyst associate level as it comes to kind of the sourcing side?
Yeah, for sure. If you guys end up looking at growth equity roles, a key part of, I'd say 90% of the analyst programs on the street is sourcing. And what sourcing really means is you're going out and originating new deal opportunities for your firm. There's multiple ways you can do this. I'd say the most fun and most productive way is to be very thematic in how you look at it. So on a Monday morning, I might spend my time market mapping construction tech software, figuring out who the biggest players in the space are, reaching out to companies, talking to founders, and trying to source proprietary investment opportunities for our firm to invest in. That's probably going to be a large part of your job at a lot of these growth equity analyst programs. So when you're thinking about whether to recruit for these programs, you should really be thinking critically whether you want to be doing more thematic outreach work or whether you want to be spending your time in the model. Because honestly, growth equity is a lot more thematic. It's a lot more sourcing. I spent last week, on the phone with 30 founders, for example. Like it's a lot more people's oriented. It's almost like a sales role in a way. So definitely a little bit different than I'd say a traditional IB job. That being said, the caveat is that obviously you need to know how to model and do all of the hard skills as well if you want to progress. So it's sort of on you to find time to learn that skill set on your own. Kind of hitting on Thomas's point about being really mature and being in charge of your own schedule and day to day as an analyst.
Perfect, guys. I think we have, like 8 or so questions or a bunch of questions in the chat. So I'll try to go through some of these. Our panelists as well, if you have time when you're not speaking, you can answer them right in the Q&A if you'd like. I guess the next topic, some of these questions actually hit on the next couple topics, and so we'll go through them and then I'll go to the questions in that order. I guess the big question, right, are especially our incoming summer analysts or incoming sort of full-time analysts have is the question of going into the buy side role right out of undergrad versus kind of going into it after the kind of the analyst program. So I would love to get Ishan, maybe you can kick us off here on kind of your rationale for going into a buy side program right out of undergrad versus you also were looking at IB, right? So kind of you I think you summer there as well. So maybe talk to me a little bit about kind of your summer versus the full-time to the analyst program.
Yeah, absolutely. So I did spend a summer in banking prior to starting as an analyst at Francisco Partners. And, I think I actually had plans to go back to banking, but kind of FP started up their inaugural analyst program around the time that I was recruiting. And so I threw my hat in the ring. But I think in short, I felt like the job was going to be a little bit more intellectually stimulating. I thought it was going to be more challenging. I also, given my experience in banking, I felt like I was going to get more ownership and exposure to sort of the types of things that I wanted to get exposure to, which I think really played out in spades and was kind of the case, during my time as an analyst. I'd also say, being on the buy side, you kind of get this unique opportunity as, someone who is like 22, 23 years old, very young, if you come in as an analyst, obviously, to, get to sit in board meetings of folks who've been in, a respective industry for decades and sort of learn firsthand how they think about solving the problems that their business is facing, or think about growth strategy, et cetera. And I think that's a really, I think it's a really unique opportunity to sort of get to be able to do that. So, I'd talked to a bunch of mentors of mine when I was making the decision, and felt like going into investing would be, just more aligned with what I was looking for longer term. And I think it's a very subjective individual decision. So, obviously, depends on the person and what you're looking for, but I thought it was kind of the right call for me.
Yeah, I think Ishan kind of nailed it, right? It's very subjective decision, depends on where you are, how much training, formal training that you need, right? Like one of the benefits of going to a traditional consulting or banking program is that training platform that you have, right? In terms of deal volume. And also sort of depends on what your end goals are, right? So if you, I think Ishan, did a great job of talking about that. Spencer, from your perspective, having come from the banking route, maybe talk to a little bit about your rationale, right, for going into banking, and now that, you do a lot of recruiting, right, for your firm, like what do you look for in terms of people, what types of backgrounds, right, pre-PE stand out, and really, like, what is your recommendation to our bankers and consultants on, like, what they should do in their time in banking to stand out, right, for the private equity process?
Yeah, few things there. So I would say, like, in general, there are relatively few opportunities to go direct to a buy side role right out of college, but it was something like a lot of the firms come to Penn to recruit, so it was something that, like, I had the opportunity to learn a little bit more about. I think ultimately I decided I wanted to do my banking experience to be able to have it. Kind of goes back to what I said earlier. I felt like I didn't really have like such high confidence that, like, oh, I know at the age of 22 or 21 when you're in college, like, this is the exact sector I definitely want to spend a lot of my career or all of my career in. And so banking generally will be in a pretty broad group, and like it's pretty common to recruit, like I'm making it up, if you're in a healthcare group, it's not the most uncommon thing to go into a tech group or a more services oriented group or an industrial group or a generalist firm. And so I wanted to really be able to develop that framework and thinking about what types of companies am I interested in, what types of deals did I most enjoy when I was in banking, to then think about, okay, then here are the types of firms that might make sense for me based on, I like working with this specific type of company. I've heard a lot of things about New Mountain, which was how I initially heard of us. And then that was what gave me kind of conviction to know that New Mountain was a good fit for me. And then in terms of what you can do when you're like a banker day to day, I'd say always trying to take a step back and think about, okay, so I'm selling this company. Here are some of the risks that the potential buyers have identified. How do I think about these risks? What data would I want to see to try and unpack them to feel comfortable, and trying to really put on an investor mindset, I would say is really, really helpful. And like one key thing that we look at during the interview process to think about, okay, so if you were in my seat and you were looking at this business, what would be your key questions? What do you think would be really, like, what do you think their growth strategy makes sense or does not? What would be the key areas you would push on with management? So really just trying to already start to think about the future job that you would be doing while you're in your current role. And I think banking is a role that does that. And then on the consulting side, particularly if you're doing like private equity consulting, that's obviously highly relevant. Those are usually like 2 or 3 week sprints focused on a specific deal or a specific sector to help a firm decide if they want to invest or not and think about underwriting assumptions. And in general, New Mountain recruits kind of pretty evenly from both consulting and banking programs, which is one thing I really appreciate. One of my closest friends at New Mountain is a consultant, and like we both view things somewhat differently because of our experience. And I would say that's pretty representative of our firm and our culture, where it is not just like an Excel oriented, financial returns, figuring out the way to ultimately get to a return. We are very thematic. And in my mind, it's the perfect mix of the thematic and the quantitative in terms of how we generally approach investing.
Perfect. Thank you, Spencer. Both, I think Ishan and Spencer highlighted this. I think the one takeaway, I think, from what Spencer just mentioned is that, even now, no matter where you are, right? Even if you're going into banking, you're currently a banker, whatever it is, the number one skill set we look for right on the other side is, can you look at your deals and companies that you think you're interested in and take the investor perspective, right? Like, would you invest in this company? What are the risks that you see? What do you think seeing the industry, right? So taking a more nuanced view, even if you're working on the M&A banking side, is what's important here. So now that transitions us to kind of the final segment of today, which is on the recruiting side, a little bit more on recruiting, interviews, networking, all of that stuff. A lot of topics here to cover. Let us start off though with just kind of an overview of the process. So I'd like to just probably break this down into the analyst level a little bit and sort of the associate level. Again, there's no right answer because it all depends on, a lot of it depends on schools you go to, which, target school, non-target school, banks that you're at, if you decide to go on cycle, if you decide off cycle, what the firms decide to do, as well as timing, right? So what might have been true in Spencer's class or in, Ishan's class or whoever's class isn't going to be the same next year because there's a lot of timing considerations as well. So knowing all of those things, right? So let's go into a little bit about the recruiting process. So either, I guess, Thomas, Manas, or Abhi, you guys can hit this as kind of going in from the undergrad level, right? In the last 2 to 3 years. And Manas, your case was a little different because there was a summer and internship versus full-time and kind of the sophomore summer, all of that. So you guys can kind of, and Thomas, you as well, I guess. You guys, again, you don't have to talk about yourself or all of your kind of dirty details necessarily, but just overall, what does the process look like? What is the timing that you can expect? A lot of your firms recruit folks out after their summer internships, right? So you go intern at a Morgan Stanley or McKinsey or Bain or Goldman Sachs. Like we might recruit you guys for the full-time program. So give us an overview of what are the different entry points, right, into that analyst program.
Yeah, I'm happy to kick it off and then others can chime in. So as Kaushik mentioned, there are a couple entry points. There's, the junior internship straight out of undergrad and then a lateral hire. I'll start with the junior year internship. I think at that point, unlike just, later in your career, the interviews are really more about, like your background as a person and less so your specific experience because, like people might have an internship or two, but you really don't have, like real work experience at that point. And, I'm sure a lot of you are aware of this, but, the recruiting process is really kicking off now. I think throughout the fall, you see a lot of companies having like recruiting events and coming to schools and meeting with people and having more informal coffee chats. And I think that's a really good opportunity to just build your network and meet people. I think that was something that I really focused on throughout the recruiting process. And just as an aside, I think has been something that I've found helpful to have done in retrospect throughout my career. I've stayed pretty close to a lot of the people that I networked with when I was recruiting for the junior internship and like continue to just stay in front of them throughout my career. But the interview process is split between technicals, which I think are the more straightforward part of it and really more a check the box exercise. It's sort of like your standardized test score in applying to college. You just sort of have to clear the bar, but if you clear the bar, it's not make or break. The other thing or the second thing is behaviorals. I think this is more important than people give it credit for. Everybody should have a 2-minute elevator pitch prepared, and then you'll get the classic questions like, tell me about your strengths, your weaknesses, times you've struggled, times like the things you're most proud of. And then I think the last thing that I also just find now interviewing people that people tend to under prepare is why this specific opportunity. And I think that matters way more for applying for an investing role than for banking, where individual firms, but then also individual groups within firms just have such different mandates, in terms of like the actual strategy, but then, like different types of companies, different subsector focuses, types of deals that they do. And so I think it's really important to do your research and have a sense for, like what is this specific group focused on that I'm interviewing for? And that's like a way that I see that candidates differentiate themselves. So yeah, I'll pause there and others feel free to layer in.
Awesome. Thanks, Thomas. So great points there, Thomas. So entry points, that junior internship or that full-time internship, and sort of, depending on how much experience you have, there'll be more related to kind of the deals or projects and things that you've worked on. Like Thomas said, I think the behavioral part is, I'd say, even more important in the private equity interview than it was in the banking interviews that we discussed kind of like a couple weeks ago. Only because, because the banking tends to be a little more technical in nature, whereas private equity, you're kind of doing a lot of qualitative things as well. So great job, Thomas, on kind of talking about that. Maybe anything else you guys want to add from the analyst side, guys? Abhi or Ishan, else maybe Ishan and Spencer, you guys can talk a little bit about recruiting process and timelines, and maybe Spencer, you can start us off as sort of since you made the kind of more traditional IB to PE jump, the different options and kind of your advice for people going into IB consulting on how they should think about on cycle versus off cycle.
Yeah, so as people have kind of said, timelines have definitely moved up for associate recruiting. I originally recruited in March, like late March, early April of my first year in banking, so I still had like 6-7 months in the seat. Different firms will approach it differently. So some firms will, like I think this past year, people started interviewing before they even started their official banking jobs, which is pretty insane. My firm personally is not one that believes in doing that. We're like kind of starting our initial kickoff of interviews this coming January into February. I would say like generally the way the process works is you'll meet with headhunters. They'll usually reach out to like individual banking and consulting groups, ask you what types of firms you're interested in. You might be pulled into info sessions through them and like coffee chats. And then interviews. I would say interviews are nowadays really moving to more of like this off-cycle approach where it could last over a couple of weeks, like there will be an initial 1 or 2 days of craziness. A lot of firms nowadays are just like not participating and or not hiring significantly from those initial waves because people are just like frankly not ready if they haven't had any job experience yet, and to recruit for a job 2 years out. So usually you'll have a few months in the seat. You'll hopefully have worked on a few deals or a deal, like at least something to be able to speak to. And then interviews will kind of happen from there naturally, where you'll meet a few people from the firm. You'll have a technical portion, I'm sure. And then just behavioral interviews with more senior people after that is, I would say, the general process.
I agree with everything Spencer said. I think, the percentage of firms who are recruiting on cycle has gone down and will likely continue to go down. Whereas you have more waves, right? Like Spencer was talking about, of sort of things happening. I think there's an added emphasis now to try to build relationships with professionals or firms similar to, it's not like banking in that you don't have to network, a ton, but really we want to understand that you've been thoughtful about why New Mountain or why KKR or why General Atlantic, right? As much as kind of the other way around. And yeah, expect these processes to go a little bit longer than your sort of 3 hours of a modeling test and then you get an offer sort of thing. Again, all good only because it allows you guys to make the most informed decisions. Otherwise, for our candidates, a lot of times they felt like they were making suboptimal decisions just because the timing was the first offer that they got, right? So I think, again, we'll kind of go into that in a second. I think the next topic I want to get at is kind of what are interviews like? So maybe Ishan, I'll start with you and then I'll go to Manas. Ishan, like on the kind of traditional kind of growth buyout tech side, what are interviews like? Maybe give us a sense of what types of questions you guys ask, what types of case studies you guys do, what type of modeling is being asked, and how do candidates sort of get ready for that?
Yeah, absolutely. So maybe I'll start by just saying I think it's hyper dependent on the firm. Some firms tend to have much more technical interview processes, and I'd say some firms tend to be less technical. If you're interviewing for kind of a technology investment firm, I think you can expect to get asked what's a tech trend that you've been following that you're kind of a fan of, maybe know some companies in the space that you can speak to. I think one thing that people really try to solve for when interviewing candidates, for a technology investment position is, can they kind of defend their view on a certain business and sort of go back and forth and really have a conversation about what their kind of thoughts are, and how much can you sort of critically think about your views, and really, and you're encouraged to have an opinion as an investor even at the junior level. So I think people try to, as an interviewer, try to index towards sniffing that out. And then obviously, you kind of want to have a good sense of, sort of the technical aspects of technology. So, having understanding of, what's gross versus net retention and understanding unit economics and maybe having some of those numbers down and being able to speak to it. And then I'd say, Spencer and Thomas kind of spoke to some of the questions that are expected on the behavioral side. Advice wise, I think one, really try to solve for the culture of the team or the firm that you're sort of going to. I mean, the people that you work around matter a lot. So try to get us, and I've heard this a million times now, but this, investing really is an apprenticeship industry. So try to get a sense of the people that you're going to work around and work under and learn from, because that's going to be kind of a big dictator of your experience. And then more tactically, really do your diligence, I'd say, in terms of the approach and style of the team or firm you're sort of interviewing for, because again, the dichotomy of sourcing versus execution as a component of your responsibilities was kind of touched on earlier, but it really does vary pretty significantly when you're interviewing for an investment role. So I'd say try to focus on getting a sense of that prior to interviewing.
Awesome. Thank you. Thanks, Sean. On the I think great job on that. Manas, on the credit side, maybe Manas or Thomas, any key differences in terms of types of questions? Are you asked to go through like capital structure questions? Any differences from your traditional LBO questions that you might expect in the private equity context?
Yeah, I mean, I think the restructuring material is broadly helpful, right? Like have an understanding of the capital structure. I think the process is largely similar, say like 80-90% of it. Like you need to understand how businesses work, right? Like you need to be able to speak to, like, for example, somebody might literally ask you, like, hey, let's say hypothetically you're like the owner of a McDonald's, like let's just walk through everything that matters here and like what might make it a good or bad business, right? So I think the kind of fundamental business quality assessment skill set is probably applies to all these roles. Beyond that, I think probably for investing roles in general out of college, you're probably going to be expected to do paper LBOs, et cetera, et cetera. Beyond that, yeah, it's like, you should be able to think about, okay, like what are the different components that could be in a company's capital structure, and beyond just kind of being able to memorize and like list off all the different types of things, it's like, I think you should try to understand things to an extent where somebody should be able to pose you like a hypothetical company in a hypothetical situation, and should be able to kind of, based on your understanding of things, craft kind of a structure or different kind of conditions, covenants, et cetera, you could put in to try and come to kind of an attractive outcome for both the company and the investor in question, right? So yeah, like a lot of it's very similar, but yeah, being able to think about how you can creatively structure things to fit the situation at hand. And you can do a lot of that with just like hypotheticals in your own head. Imagine companies in different situations, think about what you might do, or honestly use some of the smarter LLMs to generate situations and try to answer those questions. Whatever way you decide to do it, right? I think is probably the key difference.
Excellent. Thank you, Manas. And finally, on growth at GA, I guess, Abby, or more broadly, like, what are the interviews like for the growth side? Are you expected to pitch segments or sort of technologies or kind of sectors? Is it like, tell me about businesses that you like, and kind of what stage of businesses should you be picking? Like, should you be picking obviously growth stage businesses? Should you be picking like sort of public companies? Kind of give us some insight into what growth equity or what you guys might even do at GA on the growth side.
Yeah, I'd say interviews at the growth equity level are a lot more focused on sectors and industries and companies you like at that growth equity stage. And so I'd say in my growth equity interviews, I spent 90% of my time talking about subsectors and companies I found interesting. And as part of those pitches, you'll incorporate technicals into those pitches. So you should understand what LTV to CAC is. You should understand why TAM is important. You should understand why retention is important. But no one's going to ask you what net retention is. That should sort of be worked into your pitch on a company, and demonstrate understanding through that way. I'd say the number one thing I've noticed when I've interviewed candidates on the other side of the table is I think it's very easy to apply to growth equity firms because their applications are easy to find and there's a few well-known firms. I would say that if you're applying to a growth equity firm, you should convince your interviewer that growth equity is all you want to do. I'd say growth equity is one of those industries where there's very few seats out of college, quite frankly. And there's a lot of people who love tech, who love growth equity, who sort of only recruiting for growth equity versus recruiting for sort of all of the finance roles. And so whether or not that's true, your goal should be to convince me as an interviewer that growth equity is the only part of finance you want to go into. And I think the most successful candidates I've seen do a really good job of doing that.
Super. I agree with that. I think growth equity kind of the number of applications that we see to the number of roles is like the highest, right? To kind of what Abhi's point is. And so I think that's just something, and you're exactly right. Just kind of demonstrating that. Okay. Finally, I think the last area that I'll just touch on, and then there's a bunch of questions. Thanks guys for going through these questions. I'll just go, we'll go through kind of a rapid fire on these questions a little bit, maybe. And anyone here, guys, on the call can kind of answer this. Okay, so sorry. Okay, so best strategies for sourcing. I think this is maybe a little bit more towards Abhi, maybe Ishan, Manis, maybe Thomas to an extent. But like, how does this kind of a person who's an incoming professional, right, start? Is there an expectation to start building deal flow or something? On the private equity side, there isn't. So maybe on the growth or tech side, is there an expectation, guys, that you should be connecting with firms and stuff ahead of these interviews? Abhi, maybe you can start with that.
Yeah, look, like at the end of the day, like without a platform to leverage, it's going to be very hard for you to source interesting deal flow for a growth equity firm, to be honest. We have 8 analysts who spend, 40, 50 hours a week going out and cold calling founders and sort of doing that part of the role. I would say what's much more interesting is demonstrating how you source. And so when I was recruiting, I would often send prospective firms lists of companies I would invest in if I was at that firm. And the expectation isn't to sort of find net new companies for that firm. It's more so to show them if I was at this seat, this is how I would source. So I'd say it's much more of a way to like treat it like a case study, much more than I'm trying to find deals for General Atlantic and that's how I'm going to get an interview, or I'm going to get hired by GA because I found 5 new deals for them. That's not really the case, but it's more so demonstrating, how to do that skill.
Understood. Spencer, in your case, like I think there's a question that was asked about if you're currently in banking or consulting, right? I assume this is from a current banker. Is there an expectation to network outside of work, and how do you do that, without sort of, rubbing kind of people the wrong way and so on?
Yeah, I would say, I personally, I did not end up going through a headhunter to get my job at New Mountain. I had been connected through a friend of mine at Penn with someone who was a first-year associate at New Mountain. And then at the time the interviews rolled around, I was pulled in that way. And I'm on the recruiting team at New Mountain, and we get plenty of candidates that way, and we'll regularly hire people that way. So I would say like networking with folks and trying to build relationships, even if it's not necessarily for like, oh, I'm interviewing this month or starting to recruit this month. Ideally trying to network with people well ahead of interviews, I would say is the best strategy, whether that's like college alumni, people that work at the same bank or used to work at the same bank or consulting firm as you. And if it's a firm that you've heard of and that you think is interesting, I would say networking is definitely a very, very helpful, proactive thing. And like, it never hurts for someone else to be putting in a good word on the recruiting team, just because there are so many different candidates that get funneled through the headhunters. So it can sometimes be easy to get lost in the shuffle. So yeah, I would definitely encourage anyone and everyone to network with as many people as you can.
Yeah, I mean, I second that. I think exactly like Spencer said. Number one, I think the competition, even at the top universities and top banking consulting programs, is very high for private equity, right? So it's becoming, it's continues to be really popular. So you should never in life, like I encourage everyone to network no matter where you are. And it doesn't have to be very transactional. It could just be from a sense of, hey, I'm interested in this platform. I want to learn more. I'm interested in what you do. Network will only help you guys in your career, which is why we've built a networking platform, because I think it's one of those things that is just helpful as an analyst and associate, a VP, and across. The second thing that Spencer said, I think is interesting, is that, in some sense, it truly helps you stand out in a very crowded sort of environment, right? So if there's 50 analysts that are applying for the same role, or 100, or, in New Mountain's case, probably, several hundreds, similar to banking. It's not as crazy as banking recruiting, but if we know you and we like you, then I think, there's sort of there's a good chance that we might advance you in the process, assuming you do all the other things right. Cool. I think there was a bunch of other questions that got answered and also asked. So, and I think we addressed majority of these on the call. Like I said, last kind of one or two questions for you guys. We mentioned this term like investor mindset a lot that gets tested on in an interview. If I were to kind of ask you guys, maybe two-parter, what does that look like, and kind of how do you recommend people build that and demonstrate that in an interview? Again, anyone can do that. This is the most important thing that we'll test in private equity or kind of credit or growth equity interviews. Any of the panelists can take this. What are you guys looking for? How did you develop that skill set, or how do you, obviously we're continuing developing that skill set, and then kind of what advice do you have for our incoming kind of buy-side professionals to build that skill set?
I would say to answer the last part of the question, my biggest piece of advice would just be to read as much as you possibly can about whatever industry it is that you're interested in. And there are a lot of free resources available, like I would say Axios, Pro Rata, and Fortune Term Sheet, which are both relevant for both growth and regular way private equity. They'll list a bunch of deals for different companies. That's how I heard of General Atlantic. That was how I heard of Insight Partners. That was how I heard of New Mountain. That's how I heard of Apollo and KKR and all these other big firms. And you'll see, okay, who are the firms that are regularly doing deals? What are the types of companies they are buying? Are they investing in? Are they actual buyouts? Are they just growth rounds? Are they Series A? Are they Series D? And then setting aside, those things take maybe 5 minutes to read. Setting aside 10 or 15 minutes, just click through different links, understand these different companies that are getting funded or bought out. I think is a very good return on time, and just saving the names of companies that you found interesting is a really, really good strategy to show you have a proactive interest in certain sectors or in the industry. You're just generally trying to have a framework to understand how different companies fit together within an ecosystem.
Absolutely. I think,
Yeah.
the crazy thing about finance jobs, and I'll let the other ones go, is that it's not like being a doctor, right? I always say this to our MBAs, actually, where you can demonstrate that, hey, I've developed all these skill sets. You've got to demonstrate to folks that you're actually interested, right? Just having a finance degree doesn't make you, maybe doesn't convince us that you're going to be a great investor. So I think someone else had it. Was it Ishan, or was it someone else that had it?
I was just
Thomas.
going to chime in
Yeah.
and say, so I 100% agree with Spencer there. I think that there are kind of two ways I think that you can demonstrate it. One is just content, which I think Spencer really hit on, and the other is mindset. And I think that I guess that's inherently in the name, but sort of more the approach that you take to answering questions. And I think what people fundamentally are looking for is somebody that just takes a really thoughtful approach to answering a question. I think that all of us have had the experience of interviewing people where it's just regurgitating some memorized answer. And especially for investing interviews, people are going to throw you curveballs. And the point of those questions is to test how you think about things, as opposed to just, do you know the answer? And it's sort of like in school, it's are you doing your homework to just get it done, or are you doing it to learn? And I think that a big thing about being an investor is just being constantly curious and an information sponge, and wanting to just learn as much and understand the world and how things work as much as possible. And so demonstrating that through the questions you ask, and then just how you frame your answers, and I think that's the thing I'd add there.
Wonderful. Well,
One
go to Ishan,
quick one quick thing I might add there. I definitely echo the sentiment that Spencer and Thomas made on the point of trying to hone it. The last thing I'd mention is just listening and reading about other great investors. There are a ton of podcasts out there of folks who've done really well in investing, and literally just listening to the way that they think about businesses, and sort of the way that they structure their thoughts, and then trying to do something similar yourself is honestly a really good approach. And I found a lot of success in that. So just honestly spend your free time reading a bunch. And personally, I enjoy podcasts, so go listen to a bunch of podcasts that firms and folks put out.
Amazing, guys. Well, final question is just in 30 seconds or less, or 1 minute or whatever, your biggest piece of advice to someone who's a year or so below you, or 2 years below you, who's going into their careers. Anything we haven't covered, or whatever worked best for you, so that people kind of learn from you guys. And so anything else you haven't shared today for our sort of incoming private equity and private credit folks that's helped you out, or just more broadly, maybe things to avoid doing and et cetera? Just any final words of wisdom before we end today's session. Why don't we start with Manas, and then we'll go around the horn.
Yeah, sure. I mean, look, I think at the end of the day, recruiting is one of those things that is often over intellectualized. I think, you spend like, you talk to a couple people, probably have like a generally good idea of like what needs to be done. And I do think, it's mostly an execution challenge, right? Like it's not a strategy challenge. It's okay, like you need to go reach out to people and like, okay, so don't send them an email that's like, hey, like no description, doesn't seem like put any thought into it, and like, hey, would love to chat. It's like, when, for example, I get emails where it seems like, people put some thought into it, they articulated something well, like I'm pretty well inclined to reply, right? Like, and yeah, like anybody in this call, I think if you send me like a well thought out email, I'm more than happy to like talk to all of you, right? And then beyond that, it's like getting in front of people, like, and I think the one aspect of recruiting that's not really emphasized is that it's almost a little bit like rush at the end of the day. If any of you are in a fraternity or sorority, like there's going to be like, more than enough, technically, behaviorally kind of competent candidates. And like the one major question that needs to get answered at the end is like in the analyst role, it's like, okay, is this someone we can see, kind of sitting next to us on the desk for the next 2 years, and like, we're not going to hate our lives? Or, it might be a longer commitment if it's like, a program where the expectation is like you keep going, right? So I would really, think about that too. And yeah, like good luck, guys.
Thank you, Manas. Now you'll get like hundreds of emails after this session where people, reach out to you, but no, just let's not try to bombard all our speakers. Anyone who's listening to this afterwards also. But anyway, so Abhi, anything from your end in terms of final advice?
Yeah, I'd say it's very easy to get caught up in sort of chasing after those prestigious brand names, especially in college. I would really encourage all of you to think about where you want to be long term in your careers to try to optimize for that. At the end of the day, like whether it's a private equity associate role, a growth equity analyst role, like this is the very start of your career. And like, ultimately success is defined by where you'll be 10 years from now, not where you'll be 4 years from now. So like obviously like this is important, and I hope you guys place where you want to be, but like having that perspective I think is really important, and like always keep your eye on the larger goal.
Yeah, agree with that. Spencer?
Yeah, I'd echo what I said before in terms of just like reading, and I think podcasts are also a great resource, like doing that as much of that as you can, both reading and listening to a lot of podcasts on the industries that you're focused on. And then just I think generally networking, like I said, like whether it's through siblings, friends, or cousins, or what, or like people from school that you've met, you never know where, and like trying to just leave a positive impression with everyone that you speak with. And I mean that's just general life advice, obviously, but especially with a career, like these circles run really small, and there are like countless people that have come across our desk on the recruiting side that like I'll know someone who knows that person, or I'll have interacted with that person in the past, and like I will weigh in. And if I didn't have a good experience, I'll say that. And if I had a great experience, I'll say that too. Like we just hired someone this past week who I had met like a year and a half ago, 2 years ago. We stayed in touch, and like I was a very strong advocate of that person, and now they're going to work in my firm in 2 years or a year and a half. And so I would just say like those things really do happen, and it's always hard. It's easier to look back and connect all the dots and be like, oh, this made sense, and I had some strategic plan. Like this person that I had met that helped me get into my job was a random like friend who introduced me, and now like I could feasibly be here for a very, very long time, and I'm very happy about that, and like I'll always be grateful to that friend. So just trying to leave a positive impression and meeting as many people as you can, because you never really know how it'll help you in the future, or if it'll help you in the future. And then paying it forward, I would say.
That's a great point, Spencer. I think so many of us think like, hey, if I'm going to talk to this person, if I'm going to get a job or get a referral, or get a this, get a that. But, I've learned, over my last, 10 years in the industry that like someone I met 5 years ago because they wanted something. Now I'm the one who's saying, hey, let's do this deal. Right. So it's just a small world. And and I think I respect people, and I think there's mutual respect for people who, treat it that way and not super transactional, because it's just, you fizzle out, guys, and it's sort of, a lot of people do fizzle out. So thank you, Spencer. Super great advice. Thomas, anything from your end?
Yeah, I would say two things. Number one, I would totally reiterate Spencer's point there. I think that approaching networking as like making friends is a better approach long-term for your career. I think the second thing I would say is that I definitely had this in the recruiting process. There's this feeling that like you need to know what you want to do day one to then position yourself best for what you ultimately want to do. And you know, even when I talk to like some senior people on my team, it's like, oh, like they still don't know what they want to do ultimately. Like, you know, people like, I don't know, I think the better way to think about it is like, okay, I'm interested in sort of a range of outcomes with my career. And, you know, like what is the next best step that gets me closer to like sort of like in a probabilistic sense, like you know, maximizing like your optionality after that. And then if you know exactly what you want to do, then go do it. Like you've answered your question. But I think a lot of people talk about like how they knew exactly what they wanted to do in college, and I don't think like most people actually have that experience. And yeah, so
Right. That's great advice, Thomas. I think the one thing I'd add to that is taking risk, right? Like you should be risk on a little bit after you're in your 20s. Ishan, finally, last but not least, maybe you can round us out with your words of wisdom.
Yeah. Maybe last thing I'd say, which I think is broadly applicable regardless of whether you're about to start a new job or, you know, going through the recruiting process. But I think doing the unscalable things usually pays off, and, you know, go the extra mile when and where you can. I think people appreciate that. And I think if you're just intentional about your approach to learning as much as you can, you know, people will sort of take notice. And obviously folks' impressions of you, you know, are important in career. So I think, yeah, just try to do the unscalable things wherever you can, and go the extra mile.
Perfect. Well, on that note, guys, I want to end the session. I want to really thank our panelists for taking time on their Saturday to join us. I know it's exam season for our students and sort of, you know, the holiday season for our professionals and so on. So we'll share this with kind of the 400 to 500 people who signed up for the session. So your advice will scale, right, to an extent. So I think thanks everyone again for doing this on a Saturday. Happy holidays to everyone. I think our next session is with Wharton Business School in a few weeks. So we'll let you guys know. There's a bunch of more private equity sessions, like I said, in the fall, and we're gonna have a hedge fund panel with Citadel and a bunch of other firms. So looking forward to, you know, relaxing, resting, and whatever over the next couple months. And then good luck to every one of our analysts who is recruiting for off-cycle stuff. And we will see you all soon. Thank you, Spencer. Thank you, Thomas. Thank you, Abhi. Thank you, Manas. Thank you, Ishan. I think you guys did a fantastic job as always. Look forward to having you guys on in the next one. Thanks all. Have a great weekend. Cheers. Bye, guys. Bye-bye.